And then the link I am going to paste it right into the chat box. And the code is 434,590. 434,590. All right. All right. Good luck, you guys. Well, on the the training. So we will be selecting those who we think are um, prepared already or better prepared for the internship, and also all other requirements are the training gonna be met. We will the training. We will be selecting those. We again will where you want to go is just go to the website prepared already or better prepared for the internship and or better prepared for the internship, and also go all other requirements are the training. It would show gonna be met, right? Just go to the training. We will be selecting those. We again where you want to go is just go to the website prepared already or better prepared for the internship and or better prepared for the internship, and also go all other requirements are the training. It would show gonna be met, right? We will go to the training. We will be selecting those. We again where you want to go is just go to the website prepared already or better prepared for all the courses that you're better prepared for the internship, and also go all other requirements are the training. It would show gonna be met, right? We will go to the training. We will be selecting those individual again where you want to go is just go to the and then you'd also have prepared at the same time access to this prepared for all the courses that you're better prepared for the internship, you will also go all other requirements are the training. It would show gonna be met, right? We will go to the training. We will be selecting those individuals again where you want to go is all other, and then you'd also have at the same time access to this prepared for all the courses that you're better prepared for the internship, and you will also go all other requirements, and then you would also right? We will selecting those individual lesson if there are things you feel like needs correction or needs improvement. So shout out to Chris G. I admire her tenacity to look at things of very in a very detailed manner. And she's been proactively sending out feedback, which really, really helps the course as well. Because as you know, the people that are working with me behind this are not necessarily accountants. So they're also learning like you guys are. And I have very limited time to also really go and review each one. So, this is also where the biennial spirit would come into play. If you, again, see something that needs improvement, either go to the community, right? Because everybody gets access to that, or leave a comment. So the comment can also be visible by others. For example, there was a comment last night from someone. Or I was not was I sharing my screen earlier for the how do you go access the website? I think I was not sharing it. Or was I sharing my entire screen? Sorry about that. Let me reshare. So again, if you're on the Borderless website, and if you're already logged on, you can check that by clicking on this icon right here. And then if it says logged out, that means you're already logged in. If you're not, just log in. And if you're, if you forget your password, just say forget password. It will send an email notification to you to reset your password. And when you're logged in, just go to My Library. It's gonna give you a preview of all the courses that you enrolled in. And then if you're enrolled in the individual tax return training, you would also get access to the Borderless Accountants community. I don't know what to call this. It's a site in the page. So this is where you will interact with other learners, share comments or share any thoughts, and any announcements that I would also make in relation to the course would also be in here, right? So make sure that you check that community page as well. And then other than that, I also encourage you guys to leave a comment on the course. Again, if there are things that you think that needs correction, okay, or updates, or improvements or anything, right? So your comments can actually be seen here, right? So when you comment, it will be seen at the bottom, right? So we've enabled that to make sure that you're you're able to respond or you get responded to. And if you have the same question, just going through the comment section can, probably help you because that question of yours may have already been answered, right? So like for example, this one, this guy says not opening. So he's probably referring to the community section because I had a difficult time figuring out how to make the community section be available to everybody without having to, without having me manually do it. But I was able to figure it out after a few hours. So I'm just gonna respond to him and say, hey, Gar, you referring to the community section not opening? It's try should work next. So we do it like that, right? And it stays within the that particular section, right? And what you do once you're done, please don't forget to mark it as complete. Because if you don't mark everything as complete, you would not get 100% completion and you will not get the certificate, right? And I cannot see your name in here, right? So anybody who does not have a certificate will show it like this. Um, I'll show you one for the bookkeeping, for example. So let me just stop sharing. Is the audio fixed already? Good. So just bear with me one sec. Hmm. Okay. So for those who, like, if you're wondering why you don't get the certificate, that's maybe because you have not reached 100% completion rate. And it's automated. So um, it's designed in a way that the certificate gets issued only when you reached 100% completion rate. And I don't know why it's loading very slow. Check. Oh my God, what's going on? I was just gonna show you how we see from our end who's already got the certificate, and so we that's how we will reach out to you guys for the next step of the certification and the internship for the this is gonna work for both the US tax prep individual and business. Okay, not so much for bookkeeping. And again, full disclosure, um, the course is designed for you guys to already learn and apply your learning, however way you want it. So it's the the internship and the one-on-one certification is not a requirement. Okay, it's completely optional. But why is this not happening? There. So for the bookkeeping, for example, I can tell who's already completed, right? So and we can even now re-download your certificate here and resend it to you. Okay, so do the same thing for the individual tax group and the business course, and then this is how we're gonna determine who we're gonna be reaching out to. Okay, so we have your information, you have your email, and that's how we're gonna reach out to you, right? And just like, sorry, Emila, I'm sharing your account here, a little bit of your account. I'm sorry. I hope you don't mind. But this is how Emilu has her what do you call that? Has her bookkeeping lessons completed. All are have been tick marked. So if you have not every if 79 um lessons or modules have not been tick marked as completed, you will not get that certificate. Okay. So that's how it works. Make sense? All right. Do you guys have any question, clarification, reaction? Are we good? Right. And Chris G said just send in the chat box the offer link where you will register so you guys can share that out to your friends who would also like to learn individual tax prep. So I know that YouTube is there. They can always go there. But again, the problem with YouTube is it may not be as structured as it should be, right? Hindi nagsusunod-sunod yung gusto mong i-play. So the risk of you not having to take the lessons in sequence is you may be missing some important stuff, right? That would make your life difficult would make it difficult for you to understand the current module that you're watching, right? So that's it. And hopefully by Monday, I can start making the business tax prep available. So for you guys um, who are catching up, yung mga team replay, so you don't have to go to YouTube anymore. Just go to the website and then take the lessons from there. And yung mga hindi nakakapag-join sa quizzes natin sa Kahoots, they have the opportunity to answer same questions that are in um, the website. And for you guys who have already been participating live, there are options for you to actually just skim through the video and just mark it as complete. You don't have to watch entire thing, right? But you do have to complete the quizzes though, because it would not get marked complete unless you pass it. So if you fail the first time, you can always retake it, and then only then will it let you get that quiz or that particular quiz get marked as complete. Okay. Again, you don't have to go through the same video, but if you wish to, then much better, right? If you feel like you want to review first before actually taking uh, the quiz, right? Sabi nga ni Chris, it's good to rewatch the video, though as a reviewer, which is good. Yeah. So yeah, that's what we have, and then I encourage you guys to make the community alive. Okay, alive. If you share something, you wanna post anything just to also inspire others to keep going, right? And the thing with this is that this will be available for everybody for a long period of time, right? And if you leave a mark here, you'll look back 1 year, 2 years from now, you'll go back to this website and you will realize whatever you posted here would give you would bring you back memory lane, right? Because 2 or 3 years from now, I can, most of you would already be a tax practitioner, right? And it would be nice to go back and look back where it all started, right? And you'll have the place, right? And you go back and then you will encounter some names here or also are studying at the moment. Then you be the one to encourage them. Because I was like Adele, for example, she would post a comment here. Adele would then comment, "This was me 3 years ago or 2 years ago." Now, that's again to encourage those new learners, right? Because we want to make this accessible to everybody for a very, very long period of time. Okay? So, that's the point. Leave your marks in here. Alam mo yung pagpupunta kayo sa mga lugar-lugar, di ba? Makikita ko yun. I don't do it, but I see mga, kunyari, mga parola. Lalagay sila doon ng date, tapos name nila was here on this date. Something like that. So, leave a mark. Basically, that's what I'm saying. Anyways, time check 7:48. So let's go to the meat of our session today. So guys, we have already covered a lot in our climb study unit. So entity types and methods, things to remember here would be the entity types. Yung single member LLC, S Corp, partnership, C Corp, right? C Corp is the one that's not a pass-through entity, 1120S and 65 pass-through entity, disregarded entity. That means someone who is, I mean, an entity that's owned by one person. It's also called a disregarded entity. Income and farm, so you know the gross income, what compose the gross income section, right? And then rental and property loss limitation. So yung keyword, yung number dyan was 25,000, right? And then the phase out, 100 to 150K, right? Pag single or married filing jointly, tapos iba naman yung phase out kung single, right? Or married filing separately. Business expenses is our taxes, cost of goods sold, rent, interest. Other deductions would be meals, home office deductions, basis, and property transactions. So this is where we talk about the closing statement, the 1099-S, what constitute the basis of the property, yung demolition, the um, closing costs of the property, are they capitalized or are they expense? And then the depreciation, so the various types of the various method of depreciation. You've been acquainted with makers here. We've also demonstrated how this works in the actual software. The Form 4562 was also introduced to you. Credits, losses, and additional taxes, as we covered yesterday, right? So we've covered pretty much the basics for all business returns. So all these income and expenses, depreciation, these are applicable to all business types. So whether you're Schedule C for self-employment, Schedule E for rental, or 1120C for C Corp, 1120S for S Corp, or 1065, even estates, even 1041s, all these principles are applicable, right? So that is why we cover them first, because these apply to whatever business entity that you are going to be filing for. Make sense? And so right after all these, we focus on each entity. Okay. So tonight we'll be covering partnership, but I know there's one more topic that we have not finished in relation to credits, losses, and additional taxes, and that is additional taxes. Right. So are we good to start additional taxes? Unless you guys have questions, clarifications, comments. So let's see. Yung sa library po lang yun na purchase na free course. Yeah, so everything that you have availed of would show in your library in your account within Borderless Accountants. So nurchase niyo yun for free. Charot. Doesn't cost you a dime, right? And yeah, we're gonna be adding more courses in the website, but for now, we'll stop at business tax prep course, and maybe next year we can launch more courses. All right, so let's start. Oh shoot, sorry. Let me reshare, because I know I didn't share my audio.
There are many additional taxes to consider. The list we're about to review is not exclusive to these items, but we just want to highlight a few. The heavy.
Okay. Let me know if you can't hear it. Okay.
There are many additional taxes to be considered. The list we're about to view is not exclusive to these items, but we just want to highlight a few. The heavy vehicle use tax is a tax due for the use of highway motor vehicles used with a gross weight of 55,000 pounds or more. The tax is not due when the vehicle is driven 5,000 miles or less. A person might be Subject to the tax if the vehicle is a highway motor vehicle, it is registered for highway use, used on highways, and at least 55,000 pounds. Farmers often have unique rules on how to report income and expenses very different from other business types. The fuels tax credit gives a refundable credit for farming entities. The credit is allowed for fuels used on a farm or for farm purposes. If farmers have employees, they may be required to withhold taxes for Social Security, Medicare, and income taxes. Social Security and Medicare must be paid if the taxpayer has one or more employee, including family, where any individual was paid more than $150 during the year or $2,500 was paid during the year to all employees. If wages were equal to $20,000 or more, federal unemployment taxes must also be paid. Applicable large employers, or ALEs, must offer minimum essential health coverage for employees. For purposes of determining applicability, the ALE must have had an average of at least 50 full-time or full-time equivalents in the previous year. If the ALE does not offer minimum essential coverage to at least 95% of the full-time employees, the entity may owe a shared responsibility payment. If the ALE offers minimum essential coverage to at least 95% of the full-time employees, a second shared responsibility payment may be required if the minimum essential coverage is not affordable, provides minimum value, or the employee is not one of the 95% of employees offered the coverage, and an employee receives premium tax credits for purchasing the marketplace insurance coverage. All right, those are the highlights for additional taxes. Thanks for watching. For a tax period beginning July 1, a truck with taxable gross weight of 60,000 pounds registered to Mason Corp. was first used on a public highway on July 10. On December 10, the truck was sold to Mr. Diaz, who registered and used it in the tax period. The total federal highway use tax for the period was $232. Which of the following statements is false in respect to who is liable for the tax? A. Mason Corp is liable for the full tax of $232 since it placed the truck in service. Sounds kind of reasonable to me that they placed the truck in service on the highway because it was done on July 10th, and Mr. Diaz didn't buy it until December 10th. Okay, so that one seems okay because remember, we're looking for the false statement. B, Mr. Diaz is liable for the full tax of $232 to the extent Mason has not paid the tax. That's actually also true. It's a weird little rule that the liability is attached to the asset and not to the entity. So in this case, Mr. Diaz, yes, would be liable if that's the case. C, Mr. Diaz is the only one of the two owners during the tax period with any liability for the tax due from December through June. Well, that doesn't seem fair because he was not the owner at that time. So that completely contradicts the first two items that we looked at. D, to the extent that either Mason or Mr. Diaz pays the $232, the other party is relieved, although the truck changed ownership, which is exactly what we were saying why we gave the first two check marks up here. So our correct answer here in this situation is absolutely C. It's going to be one or both, but it really just depends who has the asset last.
Right. So, with taxes, it's really more of a bookkeeper role, right? It's really more of the bookkeeper who identifies if this tax is a business tax, if this is, it should be recorded in the books. From the perspective of a tax preparer, we don't really look at taxes in detail when you're preparing taxes. Only when, in reasonable due diligence, we look at the numbers and they don't make sense. Only then we look at the general ledger, right? But most of the time, we look at taxes. We just had to know where to input that in the tax software. That's it. right? So, hindi talaga siya role ng tax preparer. This is more of the role of a bookkeeper. So, sinong nagbo-bookkeeper dyan? Itong mga ganito, credits, yung mga additional taxes, these are more of your work. For us tax preparers, these are good to know things, right? So like again, if it comes up during our due diligence and we ask these questions and we, at least we know um, how those numbers come about in the books, right?
The Affordable Care Act requires an employer with at least 50 full-time or full-time equivalent employees, FTEs, to offer them affordable essential health insurance coverage or pay a penalty. In which situation is the penalty not imposed? Okay, would the penalty not be imposed if A, an employer offers coverage to FTEs, but the coverage is not affordable? No, that's literally one of the components, as it says that it has to be affordable. So in that case, a penalty would be imposed. B, an employee receives a tax credit to buy coverage and the employer does not provide affordable essential coverage. Also not true. That is literally a requirement that you have to offer the affordable essential health coverage. C, an employer offers coverage to FTEs, but the coverage does not provide minimum essential care. You have to have MEC, minimum essential care, in there. So it's pretty rare that these come up. I totally agree, but it's actually none of these answers are correct. In which situations is the penalty not imposed? A, B, and C, they would all be imposed. The penalty would be imposed. Therefore, D, none of the above is our correct answer.
All right, you guys. So that wraps up study unit number 8, credits, losses, and additional taxes. So again, guys, if I don't have anything to say on a material, that's mostly because I don't really know about the subject matter that much, or I have not encountered those myself during the years that I'm practicing. And if you feel like you want to dig more on that because it will be useful for you in the exam, there are a lot of resources out there. And again, the PDF section or the PDF version of this material is downloadable in the website of Borderless Accountants. Go to the Enrolled Agent course. You can download the PDF version of the GLIME materials that we're studying. Doon mas detailed, okay? And I don't want to bombard you with too much information na hindi niyo naman kailangan when you're actually doing the tax preparation. All right, so having said that, time check 8:02. So we are about to start partnership, right? So just a caveat, marami dito din na very theoretical. All right, so for those that are purely theoretical, in my view, I'll just breeze through them. But there are items that I feel, or I feel that are very important. Then that's when I will chime in. Okay. But if you have questions, clarification, type in nyo lang sa chat. Okay. And I will try to answer that if I know the answer. If I don't, we'll use our best friend Perplexity for it. Okay. So welcome to partnership. So far, na-cover nyo na Schedule C, Schedule E. Those are for 1040, right? This is an introduction to another business tax form, which is Form 1065. Okay? So far, medyo familiar na kayo sa 1040. Now, we're gonna delve into another tax form. Again, it's Form 1065 for partnership.
Partnerships are one of the most popular forms of conducting a business. It can be really simple, such as two individuals working together under an agreement, or we could have a complex multi-tier partnership structure. In this study unit, we'll look at the basics of what exactly constitutes a partnership for tax purposes, as well as the related filing requirements. In this area of taxation, your key documents will be Form 1065 and Schedule K1. We'll also look at getting assets into a partnership, which may be done without incurring any tax liabilities. Let's get into it.
So here when you're preparing 1065, this is a form, and you will also be encountering this schedule, the Schedule K1, right? So these two forms, very popular for business returns.
Let's get into it. In this video, we're going to talk about partnerships. So let's start with the basics. A partnership is a relationship between two or more entities who join together to carry on a trade or business. These entities can be individuals, corporations, trusts, estates, or even other partnerships. So does that mean any group of people working together can be considered a partnership? Well, not exactly. For federal tax purposes, the term partnership includes syndicates, groups, pools, or joint ventures that are carrying on a trade or business and are not classified as trusts, estates, qualified joint ventures, or corporations. For example, per se corporations like insurance companies and tax-exempt organizations cannot be classified as partnerships. Also, a domestic LLC with at least two members that doesn't file Form 8832 is default classified as a partnership for federal income tax purposes.
Right. So take note nito because it comes in, it may come in your practice. So when someone forms a business, they register before the state, right? The state. They register, parang tayo, when we register a business here in the Philippines, we register before the DTI or SEC. But we also get mayor's permit, right? Kung saan tayo located. So that's the same thing in the US. When you want to form a business, you'll have to register it before a state. Ang kaibahan lang sa kanila is that even if your state is in California, for example, you're a resident in California, you can have your LLC in a different state. It could be Wyoming, which is very popular kasi walang state tax sa Wyoming, Delaware. So those are the two states very popular pag nagpo-form ng LLC, right? So now you get an LLC, and then for you to be able to open a bank account, you will need to get an EIN or employer's identification number. So you will then register that LLC before the IRS, right? So now the LLC is registered with the IRS. The IRS will give you an EIN. Now, several scenarios happen there. Kung isang owner lang ang nag-register sa IRS ng LLC niya to get an EIN, the IRS will deem that as a disregarded entity. Tawag dyan SMLLC. So, single member LLC. So, disregarded entity. So, ano ang fina-file ni disregarded entity? Schedule C. Okay? Schedule C. Lagi niyong tatandaan yan kasi laging confusion yan ng mga taxpayers. Sabi nila, may LLC ako, do I need to file a separate tax return? Kasi akala nila, separate entity agad. No. So you always have to ask, can I get the EIN letter from the IRS? Kasi yung EIN letter, that's like a welcome email from the IRS. So doon nakalagay kung anong type of tax return ang kailangan niyang i-file. Okay? Now, so single member LLC, anong kailangan niya for that entity to be able to file a separate tax form? Kailangan niya ng election. Election for it to become an S corporation. Or, sige, S corporation kasi isa lang siya, di ba? So, kailangan niya mag-file ng 2553 and kailangan siyang may approval ng IRS dyan. Right? So unless meron siyang approval that that LLC is an S Corp, only then can you file an 1120S. Okay? Now, that's for one person. Now, kapag dalawa or more naman, usually happens for yung couple, yung mag-asawa. So they register an LLC in a state of their choice, and then they register that before the IRS. Kung dalawa lang yan, right, it will be deemed naman as a partnership before the IRS. Right? Hindi na siya SMLLC. Right? Partnership na siya kasi nga hindi naman siya single owned, right? Kailangan niya naman mag-file ng election kung anong gusto niyang maging entity talaga. Gusto niya bang maging S Corp kasi pwede naman S Corp dalawa owner, o gusto niya ba maging C Corp, right? So ganun yung sa IRS. So why am I sharing you with this, with these information? Because I've encountered this a lot. No, a lot of taxpayers kasi naman yung mga taxpayers, yung mga business owners, they're not necessarily knowledgeable about tax, right? So they may have misconceptions, right? And this is where you can support them, right, with the right information. Okay. So it happens a lot, like in a scenario wherein, kunyari, nasa ano kayo, someone reach out to you in Upwork, magpapatulong ng tax preparation. Tapos business siya ng business, LLC siya ng LLC. So before pa man mag-go deepen yung inyong conversation, tanungin niyo na siya agad. Right? I wanna know, yung LLC mo ba ay ikaw lang yung may-ari? Pag sinabing yes, candidate yan for SMLLC. Right? Kung ikaw lang may-ari, do you remember having filed a form 2553? Pag sinabi niyang wala, ask ka na, meron ka bang copy ng EIN letter from the IRS? Kung meron naman siya, send mo ask him, can you send that to me? Right? So, pag nakita mo na, wala namang sinabi doon na S Corp, partnership siya. So, SMLLC yan. Right? So, the way you would advise the taxpayer is that what we're gonna be filing for this tax year is a 1040 with a Schedule C. Okay? Ganun yung approach nyo. So, isang form lang yun. Diba? Isang form lang naman in 1040. Ang Schedule C is part of the 1040. Make sense?
Purposes. An agreement to not be classified as partnerships. Also, a domestic LLC with at least 2 members that doesn't file Form 8832 is default classified as a partnership for federal income tax purposes. An agreement to share expenses does not constitute a partnership. Similarly, co-ownership of rental property isn't a partnership unless services are provided to the tenants. Partnerships can also elect to be excluded from treatment as a partnership if they are not actively conducting a business, like a group of individuals pooling money for investment purposes. All partners must agree to this treatment, and each member must separately include their share of the income and deductions. A partnership agreement is crucial. It includes the original agreement that determines each partner's share of income, gains, losses, deductions, and credits. All partners must agree to the terms, and the agreement must have substantial economic effect. This means that there must be a reasonable possibility that the allocation will substantially affect the dollar amount of the partner's share of ownership, and the partners to whom an allocation is made must actually receive the economic benefit or burden corresponding to that allocation. A family partnership consists of a taxpayer and their spouse, ancestors, lineal descendants, and trusts for their primary benefit. Siblings are not considered family members for these purposes. Income or loss from a family partnership should be reported on Form 1065, not on Schedule C of Form 1040. For family members to be recognized as partners, they must either acquire their capital interest in a bona fide transaction if capital is a material income producing factor, or join together in good faith to conduct a business if capital is not a material income producing factor. In a services partnership where capital is not a material income producing factor, a family member is treated as a partner only to the extent they provide substantial or vital services to the partnership. If capital is a material income producing factor, the partnership agreement is disregarded if a partner receives less than reasonable compensation for services. The recipient of a gifted interest cannot receive income greater than the proportionate share of the donor. Yes, spouses filing a joint return can elect to be treated as a qualified joint venture instead of a partnership. The only members of the joint venture must be the spouses, and both must materially participate and make the election. Each spouse will be treated as a sole proprietor, allowing both to receive Social Security benefits. All items of income, gain, loss, deduction, and credit attributable to the business must be divided between the spouses according to their respective interests in the joint venture. Constructive ownership means an individual is treated as owning the interest owned by their spouse, brothers and sisters, children, grandchildren, and parents. An interest directly or indirectly owned by or for a corporation, partnership, estate, or trust is considered to be owned proportionately by or for its shareholders, partners, or beneficiaries. Okay, well, thanks for partnering with me.
Right. So take note of this. Remind me to show
Directly
this
owned
constructive ownership in a Form 1065 return, because this is one of the peculiarity of a business tax return that's 1065, yung constructive ownership, or sa business tax form, it's called beneficial ownership, right? So kapag mag-asawa ang partners, pareha silang may 100% beneficial ownership. Kahit pa sabihin technically 50-50 sa kanila yung capital ownership. But as far as beneficial ownership, kung anong ang share ng spouse mo, yun din yung share mo, kumbaga. Right? May beneficial ownership ka ng share ng spouse mo. That's kung 50% yung spouse mo, bali 50% din, I don't know how to say this, but the beneficial ownership form, kung mag-asawa lang yung owners or yung partners, both of them will have 100%. Say, both of them owns 50% of the other partner. You know what I mean? Tapos, kapag parents, 25%. Or sibling or kid, 25%. So, kunyari, tatlo kayong partners, right? Tatlo kayong partners, yung sa'yo is 25%, yung father mo, for example, is 50%, and then yung spouse mo is 25%. So yung beneficial ownership mo as a partner is 25% plus 25% ng wife mo plus the 50% ng father mo, right? So that means you have 50 plus half of 50, so you have 75% beneficial ownership, right? So I'm just saying that to you right now so that you would remind me once we start navigating the Form 1065, and I want to make sure that I show you how the beneficial ownership form works. Kasi nakakaligtaan yun. Most of the time, nakakaligtaan yun if fill out properly on the tax form. Usually because hindi siya natatackle during training. Kasi like, sa atin, hindi naman, even if we studied partnership accounting sa ating BSA program, walang concept ng constructive ownership or beneficial ownership na ganito sa atin kumpara sa as compared to the US. Kaya hindi natin to alam, right? And if we didn't study this material, or we haven't come across a material like this, and we're starting to prepare a 1065 return, this is most likely one of the review point ng reviewer na mali yung pag-fill out ng beneficial ownership. Although, nakikita mo naman to kapag nag-file ka na, nagpe-prepare ka ng return, tapos usually kasi nagpe-prepare tayo ng return, may copy tayo ng previous year return, di ba? So, kinakopy lang natin yung nasa previous year return. Usually, mga questionnaire doon kung anong answer ng previous year, most likely yun din yung answer the current year. So, pag nakita nyo na yung beneficial ownership form sa 1065, pag nakita nyo doon, it doesn't make sense kasi lahat ng, kung i-total mo yung beneficial ownership percentages, hindi siya nag-equal ng 100%. Diba? So, you would already think na bakit hindi ito nag-equal, nagsasum up to 100%. Then, you can come back to this discussion. Right? Dahil yun dun sa beneficial ownership structure.
By or for a corporation, partnership, estate, or trust is considered to be owned proportionately by or for its shareholders, partners, or beneficiaries. Okay, well, thanks for partnering with me as we walk through partnership definitions. Take care.
Jane gave each of her 2 children, Jake and Jeff, a 30% interest in her clothing store. Capital is a material income producing factor. Jeff is 21 and has worked in the store since he was 15, has developed significant sales skills, and helps his mom with the management duties. Jake is 25, married, has a job in another state, and does not participate in any of the store's management decisions. Who is or are recognized as partners? So we initially have Jane as a partner, and Jane gives away 30% interest in her clothing store. So to her son, we've got Jake and we've got Jeff going on here. Okay, so with the 30% interest going to each one of these, and the fact that it is a family partnership going on here, a family member is treated as a partner in the partnership in which capital is a material income producing factor, which is why they give us this fact right here. Given that, I would expect there to be 3 partners here, Jane, Jake, and Jeff. Even though Jake lives in another state, doesn't participate, he's still a 30% owner. His mom gifted him this 15% interest, I would say, since it's 30% to Jake and Jeff. So when we have capital as being a material income producing factor, and whether you bought or inherited or were gifted the ownership interest, you're a partner. So the answer here is C, Jane, Jake, and Jeff.
This one is purely theoretical and very scholarly question. In practice, you don't get to determine who is partner. It's going to be provided to you kung sino yung partners, right? Hindi na kayo maghuhula. Hindi na kayo magsasolve ng problem kung sinong partners. Again, this is just purely for examination purposes. But practical-wise, you would not be confronted in a situation you will have to determine kung sino-sino yung partners because it will be provided to you. Make sense?
Diane owns 10% interest in DJJ Partnership and 20% of the outstanding stock in PAD Corporation. Her son, Nick, owns 60% of the outstanding shares of PAD Corporation. The PAD Corporation owns 50% interest in the DJJ Partnership. Diane's sister, Dolores, owns 40% in the DJJ Partnership. Using the constructive ownership rules for partnerships, Diane is considered to own how much of DJJ Partnership? Okay, lots going on here. These to me are just always better drawn out to help us visualize what's going on. So we've got Diane. So we'll mark her just as a D there. And actually, let's make her a circle. Individuals really should be circles. Okay, so we've got Diane, and she has a direct 10% ownership interest in DJJ, typically partnerships are shown as triangles. Okay, so she has a 10% interest in DJJ, so we've got that picked up, and a 20% of the outstanding stock of PAD. Okay, so let's put PAD right here, and she owns 20% of PAD. Okay, so we've gotten that taken care of. Her son, Nick, owns 60% of the outstanding shares of PAD. So we're going to put Nick right here, and he owns 60%. So we have taken care of that. The PAD Corporation owns 50% in the DJJ partnership. So we're going to go 50% owned by PAD. All right, so we've picked up that fact. And then finally, Diane's sister, Dolores, owns 40% of DJJ. So we're going to go with, let's see, Dolores, DOL, and she owns 40% there. Okay, so now we've picked those all up. Using the constructive ownership rules for partnerships, Diane is considered to own how much? Okay, well, we know the 10%, right? So we know that that's a given because of this amount right here. And then she owns directly 20% of PAD, which has a controlling interest in DJJ at 50%. So let's grab our calculator, and we want 50 times 0.2. So that's another 10% that's going to come out there. Okay, so we'll get 10% here. So that takes care of that piece of ownership. Now she is then, as the mother of Nick, who owns 60% of PAD, and that would mean that Nick then owns 60% of the 50%. So let's grab our calculator again, and we will grab our 50 times 0.6, and that would be another 30% that Diane gets attributed to her specifically because of these constructive ownership rules. It's her son. I doubt as a good son he would go against her, so we do pick that up in the tax code as a result. All right, so we've taken care of that 50%. And then we've got this other connection going on with Diane's sister having 40%. Now, I would assume that, while siblings fight, you're going to get along with your sibling when it comes to reasonable management and ownership and control of DJJ. And that's ultimately what the tax code gets at here. So we're going to attribute this 40% to the taxpayer Diane here as well. So we got 40, 70, 80, 90, 90%. And that is actually our answer. The family attribution rules are really particular.
Chris, naka-mute ka.
I'm sorry, I'm muted. I didn't realize that. Kumakain kasi ako ng bibingka. Bigay ni Kelly. I think one of the best bibingka I've ever tasted. Kasi mga ibang bibingka sa mga commercial na mga establishment doesn't taste as good as that. Anyway, as if you care, right? For all I know, iba yung bibingka nasa menu. But bibingka sa amin is like the rice and the ano pang ingredient na bibingka, Kelly? Rice and I don't know. I don't even know. Yeah, but Bolano bibingka is different from the bibingka in other parts of the world. Right. Where is my tax return? So let's try to open a partnership return. And 65. Do I have one? 1065 return. Let's try to create one. So business return. This is how you create a business tax return. Just put whatever name right there. And then instead of SSN kapag 1040, diba? Pag business, EIN naman. So in EIN works this way. Ganyan yung format niya. Pick whatever state. Okay. Type is 1065 and then tax year natin. Oh, in fairness, kay ProConnect may 2025 na siya. Yung advance, ha? So, pwede na kayo mag-prepare ng 2025 sa ProConnect. Yung ibang software, they don't provide 2025 access until it's actually 2025 already. All right, so let's see. Return. So sa partnership information, meron kayo ilalagay dito na partner percentages. Right. So partner percentages. Siyempre, fill out mo na yung partner. Ayun lang. Dami partner. Ayan. So if you also see why there are various ID number is because a corporation, an S corp, even a single member LLC can be a partner in a partnership, right? So that's why you have several here. You have SSN, EIN, tax exempt pag foreign partner, not applicable. So depende, right? Mayroon pang foreign US. Pag applied for naman, meaning there could be an ITIN that's being applied for, and that's what you pick, right? So gawin natin SSN yung partner, meaning hindi siya partnership, corporation, or any of these entities, so individual partner. So dito siya lalagay, ownership capital, right? Yun sa guideline, yung 10% ni Diane, that's what you put here. Huwag mo siyang i-confuse sa 90%, right? So the real ownership is at 10%. That's what she owns in the partnership. Make sense? Pero pagdating naman sa beneficial ownership, yun yung 90%. Yun yung ilalagay sa Schedule B. So, hindi lang ako familiar sa ProConnect for business forms. Kaya kailangan ko punta here. 1065, meron to siyang natin best friend natin. Kasi iba-ibang software, iba-iba din yung way ng pag-input. How to input beneficial. 1065 turn in. So partner information, go to partner. When you specify each partner ownership percentage and any change. If there are changes in ownership percentage during the time broker provides a change. Hindi naman to. Hindi naman to. Method covers inputting beneficial ownership. Hindi. Constructive kaya. Anong term niya dito? Constructive ownership. Sa ibang form kasi beneficial. Mali pa yung spelling ko. Ah, ano ba yan? How to input constructive ownership. Alam ko nasa Schedule B ito eh. I have not used ProConnect to prepare business return, by the way. Ownership 2%, label 20% direct or indirect owner. This section will find a called percentage constructively owned. Okay. So, dito pa rin pala. So, in here, you click on the details, profit sharing. Wala naman. Profit share, ownership capital. This is not what I'm looking for. Schedule. Very niche. Okay. Hindi nag-generate ng Schedule B. Anyway, kasi siguro isa lang yung part na nilagay natin. But let's explore this on Monday. Gawan ko to ng hanap ako ng sample na partnership return. Input ko, ipa-input ko dito sa ProConnect para ma-highlight yung beneficial ownership. Para hindi kayo malito. Ano yung ownership talaga ni partner at saka ano yung beneficial ownership. Kasi it's common din. Kasi most of the time, yung partnership ay own ng family members lang din. Usually, yung mag-asawa. Tapos minsan, sinasali nila yung anak nila. So, it has to be, you have to know where to input the beneficial ownership. Di ko lang kabisado yung ProConnect. Pero sa ibang software, I know where to go to. Kaso nga lang, di ako allowed to share that right now. But let's explore that on Monday, okay? Remind me of beneficial ownership input. We will tackle on Monday, okay? Beneficial ownership or constructive ownership.
Even as strained as family relationships can be, this right here that we drew on the right-hand side of the screen is how the IRS's and the tax code is going to interpret ownership and control of DJJ. The tax code would say that Diane has 90% attribution for her in that she's considered to own. All right, so answer is C, 90%.
In this video, we're going to talk about the filing requirements for partnerships. In this video, we're going to talk about the filing requirements for partnerships. Let's start with how a partnership's tax year is determined. The partnership's tax year is determined with respect to the partner's
Lipat lang ako ng provider, guys.
Tax years. Unless in this video, we're going to talk about the filing requirements for partnerships. Let's start with how a partnership's tax year is determined. The partnership's tax year is determined with respect to the partner's tax years. Unless an exception applies, the partnership must use a required tax year. This required tax year is determined by a few guidelines. First, we look at the majority interest tax year, which is the tax year of the partners owning more than 50% of the partnership capital and profits, provided they have the same tax year. If the majority interest tax year does not apply, we then look at the principal partner's tax year. This is the tax year of all principal partners, meaning those owning 5% or more in capital and profits, if they all have the same tax year. If neither of these apply, we use something called the least aggregate deferral method. This involves calculating the deferral period for each possible partnership tax year and selecting the one that produces the smallest total tax deferral. Here's how you do it. First, identify the possible tax years the partnership could use. For each possible tax year, calculate the deferral period for each partner. The deferral period is the number of months from the end of the partnership's possible tax year to the end of the partner's tax year. Multiply each partner's deferral period by their ownership percentage in the partnership. Sum these results for all partners to get the total deferral for each possible tax year. The partnership must choose the tax year that produces the smallest total deferral. So let's say we have a partnership with 3 partners, each with different tax years and ownership percentages. So here are the details. Now, let's consider 2 possible tax years, December 31st and June 30th. For a December 31st tax year, partner A would have a 0 months deferral at a 50% ownership. So 0 months at 50%, shown here. Partner B, in this case, from June 30th to December 31st, would have a 6 months deferral, and that is at 30% ownership, also shown here. Finally, partner C would have a 9-month deferral at 20% ownership, because from September, then going to our end of December 31st would be 9 months at 20%. The total deferral in this case would be 0 times 50% plus 6 times 30% and then 9 times 20%. In this case, we would have 0, and then 6 times 30 would give us 1.8. And then finally, the other one, 9 months at 20%, would also give us 1.8 on our deferral. So sum this all up, and we would have 3.6 months deferral on that. For a June 30th tax year, we go through the same facts. In this case, from December 31st to June 30th, we have 6 months at 50% ownership. Then for partner B, June 30th, well, that's 0 months at 30% ownership. And then finally, partner C, they would have 3 months deferral from September 30th to June 30th for them, going backwards to that date. So 3 months at their 20%. So the total deferral in this case, as we go through and do this math, 6 times 50% would give us a factor of 3. 0 times 30% for partner B here. Well, obviously that would be 0. And then finally, 3 times 20% here would give us a factor of 0.6, which would give us a total of 3.6 months deferral. In this example, both tax years result in the same total deferral. The partnership can actually choose either tax year, but typically the partnership would look for the tax year with the absolute smallest deferral if more options were available. Anytime there is a change in partners or a partner changes their tax year, the partnership may be required to change its tax year. However, a partnership can adopt a different tax year for a valid business purpose with IRS approval. Income deferral alone is not considered a valid business purpose. One example is accounting for a natural business year, which is common in seasonal businesses. A natural business year is any 12-month period where at least 25% of annual gross receipts are received during the last 2 months of each of the preceding 3 years. So what if a partnership wants to elect a different tax year? Under Section 444, a partnership may elect a tax year that is neither the required year nor a natural business year, as long as the deferral period is no more than 3 months. This election can only be made if the partnership is not part of a tiered structure and hasn't previously made a Section 444 election, except to change to a shorter deferral period. Partnership returns are due by the 15th day of the 3rd month following the close of the partnership's year. If an extension is needed, an application can be filed on Form 7004, which grants a 6-month extension from the original due date. Every domestic partnership must file Form 1065 unless it neither receives income nor incurs any expenses treated as deductions or credits for federal income tax purposes. Along with the return, Schedules K-1 must be filled and furnished to the partners by the due date, including extensions. These schedules detail each partner's distributive share of partnership income and other items to be reported on their tax returns. All right, well, that's the end of this one. Thanks for watching.
All right. Before we head to the question and answer, guys, baka nawindang kayo sa mga deferral na yan. Usually, it only applies kapag ang mga partners ay C Corp or mga nagpa-file ng fiscal year. But it rarely happens. Most of the taxpayers naman, so far in my encounters, calendar year. So we don't encounter this 744 elections, yung pagko-compute ng mga deferral dates. We don't typically do it. So most of the time, taxpayers follow the 3/15 deadline. 3/15 meaning March 15, and then extended deadline is September 15. Okay, but this is good to know. Pag mga complex na yung mga clients.
Bytes Limited is a partnership formed by Warren Corporation, JCL Corporation, and Mike, an individual, to build and repair personal computers. The partners' profits, interest in Bytes, and their respective taxable years are stated below. Assuming there is no business purpose for any particular year end and no Section 444 election has been made, determine the partnership's required taxable year, and then obviously we see the information. So the required taxable year, the process that you should be thinking about right now is something called least aggregate deferrals. And with least aggregate deferrals, we are trying to figure out how long would the government have to wait in order to get the tax, which would be paid by these tax-paying entities, the corporations and the individuals, obviously the partnership being a flow-through. So how do we go about doing this? Well, we've got three partners, Warren Corporation, JCL, and Mike. We see their capital interests right here. And then we've got their taxable year end. So basically what you do is you go through each one of the setups here and see how long would we have to wait. So if we start with Warren, and Warren has a 25% interest, and if we used Warren's year end of May 31st, there's no months that have to be deferred if that is the year end that is chosen, so that ends up being 0. Okay, so I'm going to put this, let's label our work here. This is Warren. Okay, what if I use JCL? Well, JCL, we'll use a J here, has a 40% interest, and we would have to wait 3 months to get from the year end of Warren to JCL. That year end being May 31st, so we would start with the next whole month, June. So June, July, August, and if you're counting on your fingers like I am, I'm seeing 3 listed there. So we would pick up 3, and 40% of 3 is 1.2. All right, and then finally, we've got Mike, and Mike owns 35%. So if our year ends May 31st, how long would we have to wait? Well, so we'll count again. June, July, August, September, October, November, December. That's 5, 6, 7. That's 7 months. Okay. And 35% of 7 is 2.45. So we will add this up and we get 3.65. So what does the 3.65 mean? Really nothing other than you have to wait on average 3.65 months in order to get to, or a total of 3.65 months in order to get to the tax remittance on the income. We're looking for the lowest number here. That's really what we're trying to see. So if we were to use a May 31 number, we would have a May 31 year end, we have a 3.65 least aggregate deferrals calculation. Okay, what if we used JCL's date? All right, we'll go through this again. Warren, JCL, and Mike. Warren with 25%. And this time we would have to count from for Warren or from August 31st to Warren's date. So we'll start with August, obviously the next month being September. So September, October, November, December, January, February, March, April, May to get through the end of May. That's 9 months. Okay, so 25% times 9. And 25% of 9 is 2.25. Okay, JCL owns 40%. And if we're using JCL's August 31st year end, obviously there would be 0. So that ends up bringing a 0 over for us. How about Mike? 35%. And so again, we will count for Mike to get to where we be starting on August 31st. So August, we got September, October, November, December. That's 4 months. So we will pick up 4, and 35% of 4 is 1.4. And if we sum this up, 3.65 as well. Okay, so if we used in August 31 year end, we would also come up with the aggregate deferrals at 3.65. All right, so let's take a look then at the last one, which is Mike. So we'll do Mike with Warren, JCL, and Mike. So Warren, 25%, JCL, 40%, Mike at 35%. Okay, so Warren, if we start with December 31st, so we would be January, February, March, April, May. That's 5 months to get to May 31st. To get to August would be 8 months. Counting that out, and then obviously 0 for Mike if that were the case. So 25% of 5 is 1.25, 40% of 8 is 3.2, and then obviously 0 for the last one. Add this up and we get 4.45. Obviously 4.45 is much larger than 3.65. So if we're going for least aggregate deferrals, a December 31 year end, it's out. All right, so now that we've got some numbers that we can kind of put to this. Let's take a look at our possible responses. A, since no business purpose is established to establish a particular year end, the partnership must adopt the calendar taxable year. Well, we can't, because that violates the least aggregate deferrals, which is what we were trying to achieve here. B, the partnership may adopt a taxable year ending either May 31st or August 31st. That's true, because we see over here on the right-hand side that we have either 3.65 in May or August, so the partnership could elect either. And then you'll notice C and D, just for completeness, if you're reading those, D falls out because calendar year end was the greatest aggregate deferral, not the least aggregate deferral. And then August 31st, yeah, the best answer here is B. You could pick either. It doesn't matter. So we'll select B and move on to the next one. Which of the following is one of the conditions a partnership must meet to be eligible to make a Section 444 election, the election to use a tax year that is different from a required tax year? All right, so what are those conditions? Let's, or at least one of them. So let's take a peek here. A, the partnership must not choose a tax year with a deferral period that is longer than 6 months, or with the deferral period of the tax year being changed if this period is shorter. So is that one of the rules? I don't recall that being one of the rules, but let's read the next one. B, the partnership has not previously had a Section 444 election other than to change an election to a shorter deferral period. I seem to recall that in our Gleim Knowledge Transfer outline, that you could not have previously had a Section 444 election, perhaps with some exception there for a shorter deferral period. Let's take a look at C and D. C, the partnership establishes a business purpose for a different period. D, the partnership is a member of a tiered structure. Okay, this is a really tough question. The answer is actually B for us here. And the reason why is a partnership may elect to use a tax year other than the tax year that is absolutely required. Under Section 444, the partnership makes the election, but only if that partnership is not a member of a tiered structure. Tiered structure meaning you've got one partnership owning another partnership, owning another partnership over here, and it just goes on and on and on and on. That'd be a tiered structure, because it would have a ripple effect all the way up the chain, which would make it extraordinarily difficult from a compliance perspective for the IRS. Okay, so not a member of a tiered structure, could not have previously made a Section 444 election, so our recollection here was correct. And then finally, the deferral period is not longer than 3 months, not 6 months, which is why A ends up falling out here. So B is our correct answer. This is a challenging problem, but what I would recommend if you were struggling on this one is to go back to the Gleim Knowledge Transfer outline and think about those criteria, because we had a gut feeling once we read this piece right here, and the other piece that we should have been bringing back to our memory was 3 months, not 6.
All right. So time check, 8:57. I know that's a lot to take, but again, those are really just good for information and item that you would want to be familiar with, or not even just be familiar, but you need to know if you're going to take the exam. In actual practice, we don't do this. Okay, we don't do those elections related to the tax year. All right, so I guess we're good for today. We'll continue on contributions to a partnership and partnership interest on Monday. And don't forget, you guys, tomorrow, 7 p.m. Let's hear it from Carol, okay? Let's show some support. And if you guys have questions, please jot them down. We would love to hear those questions, okay? And I'm sure she would love to have those questions, because I think one thing that we don't want her to experience is yung pagkatapos ng talk, any question and nobody asks a question, right? That's a very typical of us Filipinos. We don't ask questions, and it's it's very sad. It's very sad for the speaker if walang nagtatanong about anything regarding her talk, right? So let's show some support to Carl tomorrow and prepare na kayo ng questions. Okay? Pwede kayo mag-chat GPT for your question. If you would want to be more, correct in your line of questioning. All right. So I guess that's about it for today. Goal is to end on the dot, and we are. So Miles, let's close this with a prayer.
Heavenly Father, as we close this session, we pause to thank you for your presence among us today. Thank you for the guidance, wisdom, and patience that help us complete our work. We are grateful for the opportunity to learn, share, and serve with integrity. Lord, bless every person who took part of this session. May the knowledge gained and the efforts made bear good fruit, bringing clarity, confidence, and purpose to the work we do. As we go our separate ways, grant us safe travels, peaceful hearts, and renewed strength for the tasks ahead. May all that we have done today be pleasing in your sight. We lift up everything to you, Lord, trusting that you will continue to guide us in wisdom and truth. In Jesus' name we pray. Amen.
Amen. Thank you guys. See you tomorrow. You all have a good one.
Thank you, Chris.
Pleasure.
Thank you, Chris. Thank you, everyone.
Chris.
Bye-bye.
Bye,
Ingat.
everyone.
Uh,